Okay, so we are starting this 8:35 by my time. So good evening once again, everyone. I hope you can all hear me very well. Please let me know if you can hear me very well. You can send in your chat or just on me.
I can hear you.
Okay. So today, the topic we'll be looking at is professional ethics and code of conduct. But before we start, last week, Mr. Desalo had a class with us and he introduced the course to us. So this class is audit and assurance and is a key course in your skill level. I know that some of you might have done audit as when you were undergraduate, and maybe some of you, this is the first time you'll be taking audit. Well, the interesting thing about audit is that if you put yourself to it, you can easily pass because audit class is more of the way I can structure the class is that there are some basic requirement that ICANN is looking for in such that if you are being asked a question, it's not you don't just have to just be writing story. There are specific guidelines in answering audit questions. So, for instance, if you are being asked what is audit, there are certain things, certain keywords that the examiner is looking for, and that's why this class is very important. I want you to pay attention, and if you have questions in the course of my teaching, you can drop into the chat, or you just stop me if you feel that the question you just need clarity at that point in time. I'll go back. So we can all see my screen, right? So any question, let me know before I start. Any questions so far? I hope our day has been great. My name is Mayowa. So my name is Mayowa, and I'm also I will be working with the other lecturer in delivering this class. Any question? Any question from anyone? Amarachi, don't mind me. I'll be calling your
No
name.
question.
Ugo now. Any question?
No, sir.
Lekon, Juliet. Okay. Since there is
No
no
question.
question, okay, I hope you have your jotting materials and notes with you. So today's topic, like I said, is professional ethics and code of conduct. So what we'll be looking at today is what is professional ethics as regards an accountant, and what are the code of conduct that guides the conduct that guides the workings of an accountant. What are the expectations that ICANN as a body is expecting accountant to behave? How should accountants comport themselves? What are the guidelines for you as an accountant? Very soon you all pass your skill level and you be in professional, and maybe after the next diet you'll be qualified. How Hello? Is anybody saying anything? Please mute if you are not asking any question. So, like I was saying, when you get chartered or when you qualify, there are some expectations that the accountancy body expects from you. What you're supposed to do, what you're not supposed to do. And that's why the accounting course is called a profession. It's not a vocation, it's not a trade, it's not just anyhow course. Once you are chartered, there are certain expectations that the professional body expect from you, the public expect from you, and the society expect from you. Now, because of that, it is expected that accountants comport themselves. But the thing about comporting ourselves is that the body that regulates the profession of accountant now develop what we call code of conduct. Now, code of conduct is like how will I say? It's not just for accounting body. There are different professions that have code of conduct. Most of us are working in your office. You have code of conduct. Maybe you join any society. You're a member of a certain group. You have code of conduct. That's how you should behave as a member of that body. So the same thing for the accountant. So there are code of conduct. Even the international body that regulates accountancy profession, IFAC, they have code of conduct. Now, The code of conduct that is developed for accountant, there are two major types of code of conduct that we have. Can you hear me? I said there are two major type of code of conduct or ethics that are developed for accountant. And the two major type are what we call principle-based ethic codes and rule-based ethic codes. I will explain what they are. I said that code of conduct guides the practice of the accountant, how accountants should comport themselves, how they should behave, what is expected of them. Now, the body that regulates that, like HICA in Nigeria, for instance, they have a code of conduct, and that code of conduct speaks to the activity of the accountant. It speaks to, and it's not just accountant. Once you register with HICAN, even as a student member, this code of conduct is for you. Now, there are two major types of code of conduct that we can have, depending on, let's say you are in UK, for instance, and you are registered to ICAEW, that's the Institute of Chartered Accountants of England and Wales. They have their code of conduct. If you happen to be in Canada, they have the CPA, they have their code of conduct. So different countries have code of conduct for their accountant. Now, the code of conduct for a country can either be a principle-based code of conduct or a rule-based. So the ethics is more like a way of behavior. That's what ethics simply means. So when we say professional ethics, the professional behavior of accountant. So for instance, in Nigeria, the code of conduct that I can operate is called principle-based code of conduct. And it's what we will first look at. What is principle-based code of conduct? A principle-based of code of conduct for accountant is a code that specifies the general principle of ethical behavior and requires the professional accountant to act in accordance with the principle. Now, what does that mean? When you say a code of conduct is principle-based, you are simply saying that there are different principles in that code of conduct. All the accountant needs to do is to know the principle that guides a certain behavior. Take, for instance, if we are saying a principle base and an accountant needs to, let's say, make a decision now. If the code of conduct is principle based, that accountant will only apply the principle to the decision he wants to make. It's not stated that this is how you should behave. It just give you like a guide. That's what we mean by principle based, a guide. But when you talk about rule based, now a rule based code of conduct is the one that contains specific rules about how accountants should act in specific situations. So for those countries that have rule-based code of ethics for accountants, there are clear rules that are specific for each specific situation on how they should behave. Are we together? Any questions so far on principle-based and rule-based code of conduct? Is there any question from anyone before I go on? Don't mind. This class will be interactive. I'll be asking questions. You can unmute if you have question. I'm assuming there is no question. Hello, Juliet. Do you have any questions so far?
Mr. Mayo.
Yes. Hello, I can hear you.
In the layman terms,
Okay.
what's the difference between the two?
Okay. So the difference between principle-based and rule-based, I've just explained to you that principle-based will give you a guide, different principles that you can apply for different situations. There are no clear details on how you should behave in a situation. It only give you a principle. Take for instance, how much should an accountant charge for, let's say you are an auditor now, you work in an audit firm, or you have an audit firm, you're a partner in an audit firm. The principle-based ethics will only tell you that if you are conducting audit for a certain firm, you should charge 25% in that your work, their audit fee you should charge should take into consideration the number of hours you spend at the client side. You should take into consideration the staff strength and all the materials and what you will need to use in the audit. That's principle. It will give you a guide. But if it's a rule base, the rule base will specifically say that if you are conducting audit for this type of firm, you should charge this amount. So the difference between the two is that in rule based, there are clear specific rules for how the accountant should behave or act in specific situation. Why for the principle base, the accountant will only act in accordance with the principle. The accountant will now be using what we call professional judgment in deciding how to act in each case. Is that clear?
Yes, it is. Thank you, sir.
Okay. Is there any other question before we go on? Now, for the risk base, if just from what I have explained, Sheung, what can you say? Is there any advantage over one? Which one has advantage? Which one has disadvantage? Or what can you say about the advantages of having a rule-based or a principle-based ethics? Can you say anything about that?
Okay, I feel that for rule base there will be uniformity.
Okay.
Why for principle base, there will be
Yeah, man.
reliance on professional judgment. So there's no
Okay.
there's no fixed, there's no concrete, people tend to use their own discretion so I think
Yeah.
that we can cite that as an advantage of rule base. And
Yeah,
looking at
you are right.
yeah.
You are right. For rule-based, there is uniformity in action. There is no ambiguity. There is clear direction for the accountant. Oh, this is what I'm supposed to do in this situation. Why for the principal base? It's left to the judgment of the accountant. Oh, is this improper? Is it ethical? There are no clear direction. Now, as much as that's the disadvantage for for principle base, the rule base also have its own weakness. And number one weakness of the rule base is that when professional bodies they develop a rule-based code of ethics for accountant, what they are saying is that for all situations, this is how you should behave. But that comes with its own disadvantage in the sense that there are different situations that accountants will face. And you can't preempt all the situations that accountants will face. So if you are saying you've made rule for the situation, life is complex. A situation might come up that the rule will not be applicable because circumstances can be complex and very and varied. So it is impossible to plan for every type of ethical problem that an accountant will face. So that's number one weakness of the rule base. The number two disadvantage of the rule base is that account the business environment is changing. Before now, we technology has so evolved that there are AIs, there are different applications, the way data analysis have come to affect almost every aspect of work life. So if the body that regulates accountant have made rules that, oh, this is how these things should be done, and with the way technology is evolving every now and then, it means that they will be changing the code of ethic almost every time. So that's another weakness of the rule base because business environment is changing. So the rule base might not be able to catch up with all situations that accountants will face. And don't forget, this topic is about the professional ethics. That means how accountants should behave in different situations. So if you make the rule that this is how they will behave, but times have happened to that rule, then you are creating a problem for the accountant. So that's one weakness of the rule base, and some of the weakness of the rule base rather. Another weakness of the rule base is that the rules might not be cross-cultural. What I mean by that is that, for instance, there are different situations that based on where accountants operate, the rules that might work in a certain region now might not be applicable in another region. So if different accounting bodies are having rule base, it means that if I'm an accountant in Nigeria and I go to maybe UK or wherever, because I'm used to the rule base, I can't apply the rule there. So, but if the accountant body has a principle based. It's easier, it's flexible, it can change easily, and I can quickly adapt to the business environment. And that's why both IFAC and ICANN, that's IFAC is International Federation of Accountancy. What they've done is to adopt the principle-based ethics. So ICANN is using, if you see a question, what type of code of ethics is being employed by ICANN, the type that ICANN is using is the principle based because of the flexibility. It allows accountants to apply professional judgment, and it's also it's much easier to adapt to business environment. Now, from all I've said so far, whether the accounting professional body in any locality is using rule based or is using principle based, there are 5 fundamental principles that, whether it's rule based or principle based, must be there. These 5 fundamental principles, they apply to all accountants, and they are what we call the 5 fundamental principles in the code. So if you take an ICANN code of ethics, for instance, there are 5 basic principles that you will see in that code that every accountant should abide by. So we'll look at these 5 we'll start with the 5. We'll look at them and how should accountants apply them. What situations will accountant need to apply these 5 principles? Now, these 5 principles, we have what we call threats. Now, those will get there later. Threats are what will affect accountant applying these 5 principles. So the first thing on the principle, the first point or first principle in this code of ethics is integrity. Now, I'll go back. Professional ethics, that's the topic. Don't forget when we start. The behavior, how accountants should behave in society, what the accountancy body expect of accountants to do. So number one thing is called integrity. As an accountant, when you get chartered, as an accountant, even as a student member, you are expected to have what we call integrity. What this simply means is that members, when we say member now, whether you are a student member, you are qualified, or you are a staff of ICANN, you are expected to be straightforward, honest in all professional and business relationships. Now, what that means is that an accountant should not cut corners. An accountant should not be lying. When you get a work, whether you're an auditor, if you know that this audit work, you don't have the required knowledge, or you can't handle this work, don't lie and say, I can do it. So as an accountant, you are expected to be straightforward, honest in all professional and business relationships. Integrity implies not just honesty, but also fair dealing and truthfulness. So it means that when you are dealing with clients, you are in your workplace, and you are not supposed to be what we call dishonest. And most of the time, we'll be talking about external auditors, external accountant working in accounting firm. Even if you are qualified today and you are an internal auditors, these principles applies to you as long as you are a member of ICANN. These are the 5 fundamental principles. So like I said, number 1 is integrity. Number 2 is objectivity. And what objectivity is speaking to is that you are not allowed to be biased. What's bias? Meaning that you should not be sentimental. When you have to prepare a report, whether you are preparing a report for a client or you are preparing a report for management as an accountant, you are not allowed to be biased, to put your sentiment into it. Maybe because you say, and I know this firm, or and these people, if I release this report, their share price will fall, or this will happen. No, as an accountant, you're supposed to lay it clear as it is. That's what we call objectivity. Conflict of interest. You don't allow any conflict of interest to affect your work. You report any conflict of interest to the right authorities or whoever. Undue influence of others to override their professional or business judgment. You don't allow maybe your boss now say, go and prepare this report, and because you know that this boss, if I say it as is this boss might shout on me. No, you have to be opinionate. You have to make your opinion clear, be objective, look at the figures and report it as it is. Accountants are not to cut corners in their report. Then, any questions so far? Number three, if there is no question, but if there is any question, just let me know. Professional competence and due care. Professional competence and due care simply means that you have a duty to maintain your professional knowledge and skill at such a level that a client or an employer receive a competent service. What that is simply saying is that you should be able to, if you say you are a chartered accountant and you say you can prepare a financial statement, you should not you should not say you can do what you can't do. And you should have the right knowledge as at whatever level you are. So if you get chartered today, you should have adequate knowledge that a chartered accountant should have. If you say you have 15 years experience as a chartered accountant, you should have required knowledge for 15 years experience. If you say you're an auditor and you've been an auditor for, let's say, 3 4 years, you should have required knowledge. You should be developing at the right pace. That's why I said you have a duty to maintain professional knowledge and skill at such a level that a client or employer receive a competent service. So if you get a client now, you should give them your best, your best based on current development in practice. You should develop yourself. You should go for, and that's why the ICANN body has what we call MCP, mandatory compulsory mandatory continuing professional program. What that is all about is that you can sign on for the MCP and you have credit hours. They will train you on different kinds of different areas of accounting, whatever your interests are, whether it's in audit, whether it's financial reporting, corporate governance, whatever area you want to build competence. The accounting body have that. Then you can also by yourself just develop yourself, get technical skills here and there, do exam, go for training. So as an accountant, this is a fundamental principle that you should have. You should build competency and do care. Any question on that? Mutia, thanks for joining us. You're welcome. If you have questions, just let me know. So I'll continue. Number four, the fourth fundamental principle in the code is confidentiality. Confidentiality. And what confidentiality is saying is that accountants should respect the confidentiality of the information acquired during professional and business relationship. And you should not disclose such information to third parties without authority or unless there is a legal or professional right or duty to disclose. So what confidentiality is saying is that in the course of your work as an accountant, you will come across informations, sensitive informations. You will come across information because of your work. You are reviewing a financial statement and you see informations that because of the relationship you have with client, whether even in your office as an accountant, management, executive management will you have you will be exposed to some informations that other staffs will not be exposed to. As a professional accountant, you are not to disclose such information to third parties without authorization. That is, every information that you have, it is expected that you respect the confidentiality of such information, such that you are not disclosing that information whether to your wife or to friend without authorization. That's a principle in the code, and it is very, very critical. Take for instance, you're an accountant and you are reviewing now. There is recapitalization going on, so banks are trying to increase their capital base. I hope you all know that. Now, what banks are doing is that a lot of banks are going on stock exchange, trying to get people to come and buy into their banks. Some are even trying to merge. Now, let's say you are the accounting firm or the audit firm for such a bank, and you have information that these bank shares will crash or something very sensitive to the bank. You don't disclose such information to third party anyhow. without authorization. You don't start saying, don't buy these shares. So as a chartered accountant, you don't disclose such information because those information come to you as a because of your work or relationship. So you're supposed to hold it in high esteem. Now, having said that, there are situations that you might need to disclose information. What did I say? There are situations that you might need to disclose such information. So if I may ask, Amarachi, are you with us? Can you just give me one of such situations that you might need to disclose confidential information as an accountant? Anyone?
Um,
Okay, we are
Off the
listening.
top of my head, I think I'll say, maybe when life is being threatened.
Okay. Any other person? Who go now? Any?
Government,
I'm
yeah,
listening.
when it relates to the government, when the government acts from you, I think so.
Okay, when the government has from you. Thanks. Juliet, are you with us? What are those situations that accountant might need to disclose confidential information? Okay, while we wait for that. Now, the situations that you might need to disclose sensitive confidential information, like Oluwaseun said, when the government requires such information, when there is a legal requirement, or when there are professional duty as an accountant to disclose such information. And the situations that will require an accountant to disclose that accountant have specialty duty to disclose such information. Such situations are one, in the case of money laundering, when you are working with a client and you discover that they are in money laundering, accountants have to disclose such information. The way you disclose the information, there are steps to it, but you can't say, this my client is confidential information. I don't need to disclose. When you're an accountant and in the course of your work, you discover cases of money laundering, you have a professional duty to disclose. Now, the legal duty to disclose confidential information is when you are summoned to court as an accountant. Maybe the client has been involved in court case or whatever, and they require information from you because you're an accountant. You are supposed to disclose. So I've said two things now. When is a legal right to disclose? When it is professional right, professional duty. Professional duty can be in cases of fraud, in cases of money laundering. Then the legal duty is you are summoned to the court of law to come and disclose the information. So those are the situations that confidential information can be disclosed. Any question?
Yes, I have a question. Good evening.
Okay. Sister, good evening.
Yes, please. What if in a situation whereby, let's say, the financial statement of the company now does not show a true and fair view? Probably the company did something like window dressing or smoothing of their financial statement. Can we
Okay.
disclose? Mm.
Now, when you're an auditor and you are auditing a financial statement for a company and the financial statement does not show a true and fair, or the financial statement has been prepared not in line with IFRS, you are not supposed to disclose that. That is a different aspect because the disclosure we are talking here is disclosing to a third parties. So the only time you can disclose such confidential information to a third party is when the law requires you to do so, or when is a case of money laundering, outright fraud that will impact the public. For instance, if a company prepare financial statement and is being window dressed and it's just the shareholder that the auditor has responsibility for. Now, if that financial statement is not prepared accordingly in line with IFRS or standard, the auditor has obligation to report it to the shareholder. There is no confidentiality in auditor telling shareholder that, see, this financial statement is not well prepared, it doesn't show a true and fair figure, there is window dressing. That one, auditors will report to shareholder, not to the public, not to third party. Shareholders are the owners of the company, so you have obligation to them. But what we are saying here is that telling a third party that is not involved with the client at all, like somebody in the public, maybe an auditor, or you discover a financial statement that this financial statement, you now go and tell a stock exchange, maybe you have a friend that, see, those people financial statement that I review is not right to all this is their share price. By the time the financial statement comes out, is to show that it's not right. So you better sell your share. That is breach of confidentiality. Are you clear, Esther? Is that clear?
Yes, sir. Thank you.
Okay. Okay. So now the fifth fundamental principle in the code, which is the last, is professional behavior.
Mr. Maiwa,
Hello, yes?
yeah, please, I have my hands raised.
Oh,
Just ask.
sorry. So what's
So,
your
yeah,
question?
based on the question, the answer you just gave, right, concerning the
Yeah.
financial statements, I feel that the you said that the board of directors, you said something,
The
investors
shareholders.
that the shareholders, yeah, they are
Mm,
the ones that is for financial statement that they are the ones that we should when we see anything being creepy in preparation of financial statement, they should be the one we should disclose to.
okay.
But I think the shareholders are not the only consumer of the financial statement. The government is part of it. They will use some of the details there to calculate the tax and the rest, and also the citizens and all of that, and people that also, like, let's say other people, even employees, like people that work at the firm and all the
Okay.
rest. I feel they should all be carried along because the financial statements affects
So
more people.
so I get your question and understand what you're saying. That the effect of the financial statement, it doesn't speak solely to the shareholder, Abby,
Yes.
that other people still have stake in it. Now let me open up the question. She said if a financial statement has been window dressed or the financial statement does not show a true and fair, Abi, now what is the work of the auditors? And these are some of the things that we'll still look in detail in this course. It's just like we were trying to jump ahead of ourselves, which is fine. Now, the work of an auditor is to express opinion on the financial statement, whether it has been prepared in line with applicable standard and the company's the laws of the land. Two things that the auditor is expressing opinion on: whether the financial statement has been prepared with applicable financial standard or the financial statement is prepared according to legislation of the land. And that's where CAMA 2020 comes in. Now, when an auditor is conducting an audit over for an entity, whether a client, and is reviewing their financial statement, this is why an auditor is coming in. Usually the owners of the company are different from those that manage the company. So the owners are usually shareholders, especially for large companies that will have impact on the public, like you say, that are other stakeholders. So the owners are usually shareholders. Then those that manage the company are the executive management, your directors, and the senior managers. So the reason the auditor is coming is because the ownership, which in this case the shareholder, they need the management to be accountable. They want to review what the management has done in the course of the year. So the issue of stewardship and agency comes in. The managers are the stewards for the shareholders. With In the course of the year, let's say an accounting year, January to December. These are what we've done. We have asset, we have liability, and this all that has happened in the company in the course of the year should be represented in the financial statement, right? Now, when they prepare the financial statement, is a report of what they've done. Now, the shareholders need an external person to review that work. And we'll look at that today. Independence. Why you need an external auditor? Why the shareholders are not relying on internal auditors to review financial statement? It's simply for independence purpose that these auditors are not influenced. These auditors are objective. So if they come in, the management don't have influence over them. They can say, this is what we've discovered in this financial statement, and this is what it is, without influence from management. So when auditors come in and they are reviewing financial statement, and they find out that this financial statement does not show a true and fair view of the, or this financial statement has been window dressed, is not prepared in line with applicable standard, what is the auditor supposed to do? The auditor is expressing opinion, don't forget. And the
Mm.
opinion can either be the financial statement shows true and fair, or it does not. Now, whatever the opinion is, whether it's favorable to the management or not, the auditor will report it to shareholder. That's why the auditor the auditor is responsible. The auditor is liable and answerable to shareholder, not to management. The shareholders, they are the one that approve the auditor. So when the auditor sees anything in the financial statement, the first thing is discuss with management, those charged with management, what has happened here. Now, when he prepares his audit report, he's submitting it to the shareholder. And once that report, whether the report is saying is a qualified report, we will get there in this course. When you say a report is qualified, it means that the report does not show a true and fair. It could be different reason why it's qualified. And when you say unqualified, it means that this report shows a true and fair. So if a report is not prepared in line with those standards and is window dressed, the auditor will express that opinion to the shareholder. And once that report is made public, everybody will see the report. Everybody, if it's a listed company, take for instance, what listed companies do we have now? MTN. Let's say the management of MTN, they prepare a window dress report. They've not applied appropriate IFRS in preparing it. The recognition of revenue are false and all of that. And they employ an external auditor like maybe PwC or KPMG. Once KPMG finish their work and they prepare the report that this report is not prepared in line with IFRS, they express their opinion and they submit it to the shareholder. And the shareholders approve the report. It becomes public. Everybody will see it. At that point, those who have stake in that company will say, it's not before it's public that the auditors will go behind the back and start saying to whoever, see. It has to first go to the shareholder. Everybody will sit down. And once it's accepted that, this is the report, it will be made public. Then whoever wants to use the report will now see clearly. And investors, wise investor rather, will look at audited financial report before making decision. So there is difference between unaudited financial report and audited report. Auditors are not supposed to report unaudited report to third parties. They report it to shareholder and management and they resolve whatever they need to resolve. But once the report is made public, it's what we call audited report. And that's what investors and all stakeholders will use to make their decision. So your questions of there are many people that should know if a company is not having a good financial statement or is not well prepared. That will happen when the audited report is made public and you can now make your decision. Stakeholder can now say, should I still continue with this share? Should I do that? But reporting it before time is a breach of confidentiality. Is that clear, Luashen?
Yes, please. Thank you very much for taking it.
Okay. So the last one on that fundamental principle is professional behavior. And what that is saying is that members should comply with relevant law and regulation and should avoid any action which discredit the profession. Now, as an accountant and a student member, it is expected that you should not do anything that will bring dishonor to the profession. So an accountant should not be involved in anything that the public will now say, ah, that's how they are. They call themselves accountants. See what they are doing. They are the ones stealing money. They are the one fighting. All those kind of things are not allowed. So you're supposed to behave with courtesy, consideration towards all whom they come in contact in a professional capacity. So when you are dealing with your client, when you're in your office, you're with management, you're with top whoever, you're supposed to comport yourself and carry yourself with courtesy. That's one of the last fundamental principle. So I will just say the five again. Number one, integrity. It's expected that accountants should be honest and straightforward. Number two, objectivity. Professional competence and due care is the third one. Confidentiality is the fourth. And the fifth is professional behavior. Now, as simple as I've explained these five fundamental principles, is a recurring question in past questions. If you take a past question of any skills from any years, you always see this, and it's an easy mark that you should quickly get. Most students don't know that these are some quick win. So these five fundamental principles should just be in your head. Number one, integrity, objectivity, professional competence and due care, confidentiality. Then the last one is professional behavior. Now, having discussed all that, what the body has also done, the code of conduct for members. Now, we are now talking about HICAN code of ethics. So there are, of all these five fundamental principles, there are key areas that the code of conduct now addresses. We said you should be behave professionally. There is professional behavior, there is confidentiality, due care, and all of that. All these five, there are key areas that the code now focuses on. And number one is independence. Number one is independence, objectivity, confidentiality, and conflict of interest. We will look at these areas in full. Now, why do we say independence? Now, if you look at the scenario that was painted, that we have shareholders, they own the company, management run the company, and shareholders want to assess how far management has been doing, and they want accountability from management. So they employ the external auditors to come and conduct or to review the financial statement and express opinion whether it's prepared in line with applicable standard or on whether the financial statement shows a true and fair. Now you need somebody who is independent. You need somebody who is independent to do that. Now that's for external auditor. Or whether you're an accountant working in your finance department, you are working and making report daily for management. Whether you work in whatever industry you're working, you're an in-house accountant, a financial accountant, or a financial manager. You're preparing management account, and you report to management. You send your report to CEO, head of operations, and all of that. Now, for that report to make sense, or for management to hold that report with seriousness, they want somebody that is independent, somebody that is not easily influenced. You might work in a place that the MD will be saying, no, go and do this. No. As an accountant, independence is very, very key. Whether you're an accountant, you're an auditor. Even as an internal auditor, management has given your department, whether you work in internal audit, that these are what you're supposed to do. You are supposed to do it in a state of independence, no undue influence from anywhere, so that when you prepare the report for management, it can be relied on. So once there is a compromise on this independence, then whatever you are doing doesn't make sense. So take the case of the shareholder, the external auditor, and the management. If shareholder sees that this external auditor has been influenced by management, would they still rely on that opinion that is expressing? No. Or if the public who will take the final audited financial statement, investors, shareholders, and other stakeholders, even the government, and they see the report that is prepared by the external auditor, and they have a sense that this external auditor na padi, would they still depend on that report? That report doesn't hold water again. So whatever area you find yourself as an accountant, practicing as an auditor, as a whatever, this independence is very, very key. Is and in looking at this, there are two major areas that independence is required. There is what we call actual independence and passive independence. The actual independence simply means independence of mind. And now this one speaks directly to the accountant, it speaks directly to the auditor. What actual independence, which is also independence of mind, what that is saying is that, let me first read how it is defined. We need to understand it. Once you understand, you can always come up with this definition. Independence of mind means that the state of mind that permits the provision of an opinion without being affected by influences that compromises professional judgment. The state of mind that permits the provision of an opinion without being affected by influences that compromises professional judgment. Now, what this is saying is that I've told you that auditors express opinion. The objective of the auditor in an audit is to express opinion on what has the financial statement. Now, the auditor must have a state of mind that when you are providing this opinion, is not affected by the influences of any other person. There is no undue influences that will make the auditor to compromise their professional judgment. You know, what auditors usually do is that we use professional judgment a lot. And that's why when we started, I said there are principle-based and rule-based. A lot of accounting profession all over the world, they do more of principle-based. The reason they do more of principle based is what we've stated, that because you require flexibility on so many situations. So there is a guideline on how you should behave. But whether it's principle based or rule based, those five fundamental principles apply. So how do you express opinion that it will be that people, if you are using your professional judgment in doing things, but at the same time, there should not be undue influence from any other quarters that will make you act otherwise. So you are acting with integrity, exercising objectivity, and your professional judgment. Let me give you an instance. The case of the external auditor, or you work in an office, you are the financial manager, and you have, let's say you are even the head of finance, and you have MD. Now, the MD or maybe you have MD and you have head of operations. You work together with head of operation. But let's say the head of operation is part of executive management, and you as a financial manager, you are not. And you're supposed to prepare a report. And the head of operation comes to meet you that this fixed asset that we purchased, don't report it as 10 million, or don't report it yet. Don't put it in your management report yet for management. And he has that influence to influence you not to report it. At that point, you are not independent. Do you understand what I'm saying? Once there is an external person that can influence your opinion, whether you're an external auditor or the external auditor have seen that a financial statement is not showing true and fair, instead of reporting it to shareholder the way it is, and the management is saying, if you report this financial statement to shareholders that is not showing true and fair, next year we will not use you as our external auditor, or we will not pay the money. Once your opinion is affected by external influences and you compromise your professional judgment, then you are not independent of mind. So when we say independence of mind, it means that the auditor, the accountant, is able to provide his opinion without being affected by influences that will compromise his professional judgment. He can act freely and exercise his objectivity and professional judgment. Nothing is influencing the accountant to act otherwise or to compromise his professional judgment. Is that clear? Any question on that before I go to the next one? B3, do you have any question on that? Okay. If there is no question, the second one, independence in appearance. Now, what independence in appearance is saying and how it differs from the one I've explained. The first one is that nobody is influencing you to act otherwise. You can express your opinion and your objectivity and exercise your professional judgment. Now, independence in appearance, what this is saying is that there are no circumstances or facts that will make a third party to think that you are not independent. So there are no situations, no circumstances or evidence that will make a third party to think that you are not independent. That's how I will explain it in a plain language. And what is if you want to just understand the fact before it means that the avoidance of facts and circumstances that are so significant that a reasonable and informed third party having all knowledge of relevant information will conclude that a firm or member is not applying professional judgment. So what independence in appearance is saying is that there is nothing to show to somebody who is not in the mix and say that you are not independent. Let me give you a scenario. For instance, you are an external auditor to a firm, and let's say KPMG, let me use MTN. KPMG is an external auditor to MTN, and the senior audit partner for that KPMG that is conducting audit for MTN is the man is married to the head of finance in MTN. I don't know if you understand what I'm saying. You are the senior audit partner or the engagement partner for the audit in MTN. You are an external auditor. You work for KPMG. You are now auditing MTN, but the head of finance in MTN is your wife. Now, in that situation, if someone else just say, you are the auditor for MTN, that person can just look, and the wife is and the wife of MTN is head of finance. It will appear to people who are outside that both of you are living at the same house. In the morning, you say you are going to audit and KPMG for audit, and you are going to MTN. Both of you will leave us, and both of you will get to MTN. The report that you are auditing is prepared by the person that signed it up is your wife, and the final audit report that will come out, you will be the one to sign it. So when a third party looks at that, it will say that there is no independent, and there are possibility that there might not even be any what how will I say? There might even be objectivity. You might even be serious with your work, so that there is no influence from the wife. But once an outsider will look at it and say there is no independence in this thing, that means that independence in this case is threatened. Is that clear? It means that the situation does not pose for any third party to believe that there is no independence. Any question on that? Okay. If there is no question, I'll continue. Now, what are the rules of ICANN on independence? How do ICANN, like I said, once independence is threatened, your report becomes useless. Your opinion does not matter. So, like the case I was trying to cite, once independence in appearance is threatened in that situation, no matter how well prepared the level of integrity and objectivity that is into that report prepared by that senior audit partner, people will not believe the report. Maybe it's his wife that is head of finance and his husband is the auditor. So once that is threatened, then the report doesn't matter. So what I can have done is that how to help accountants to address this issue of independence. Now, the first one on independence of mind that we're saying there is no undue influence for you not to express your opinion. There are situations that the accountant will find themselves that they have undue influence that they don't know how to address it. And that's what we call ethical dilemma. Situations that you find yourself, let's say your senior finance manager and you are the maybe finance associate, and the finance man is telling you not to report a certain thing, and you know that this thing is false, or is telling you to doctor the number. Now, in that situation, how do you help it? Because your professional judgment is compromised. You're not being objective. And don't forget, we said that integrity, objectivity is fundamental principle. You can't apply it in that situation. It's threatened. What do you do? So what ICANN has done is to have some guidelines for members when their independence is threatened. Number one, all members are advised to discharge their duty with integrity and objectivity. A member should not allow his name to be associated with a document, report, or financial statement that is misleading or biased. In the case of independence in apparel, once you see that there might be sentiment, you are not supposed to be part of it. For that other example that I cited, the audit partner should excuse himself from the audit and tell his firm, I cannot be part of this audit engagement because there is a conflict of interest. Even though it doesn't mean you will compromise, but because of so, I cannot be part of it. If it's in the case of your boss, you might look for somebody that can help you talk to the work or find a better way to avoid doing that. Because if you do something that is wrong and is eventually the information now comes out, you will be liable. And we've had cases that members are disbarred, members are their licenses are revoked, so that one gets chartered today and you pass all your exam after sweating, sleepless night, going for online class, reading, and one now qualifies, and there is something that now threatens your independence and you do otherwise, and it gets to ICANN, they can revoke your license. So those are the implications. So ICANN is saying that once you have situations like that, you should dissociate yourself. You should not sign a report you know that is misleading. The auditor, then another way is that the auditor should not hold beneficial interest in the equity of a client's company. Now, why is this stated? If you have shares in some clients, in some, let's say you bought shares in MTN, and you have an audit firm, and you now want to go and audit the company, there will be compromise. Your independence is threatened. Even if you do your work very well, people will say you are protecting your interest. So auditors should not have beneficial interest in the equity of the company they are auditing. That's client company. They should not accept fee, the amount which is dependent on the sources of the assignment. So if an auditor is being saying or an accountant, if you don't do this, we will not pay you this money. Once you want to give you job, they say, for you for us to pay this money, the report must show you must put an opinion that our financial statement shows true and fair. If it doesn't show, we are not ready to pay you. You should not take up such assignment. Auditors should only act for client should not act for client in executive capacity. What that is saying is that you can't be an auditor and still be part of the management of the client. And you should that because that will threaten your independence. You are sitting on the board as maybe you are part of the executive board. You make decision for the client, and you're also a partner in an audit firm. That will be independence in appearance. You should not be an auditor for two opposing clients. What this is simply saying is that though we have bigger audit firms that can do this, and the reason they can do this is that they have what we call Chinese wall. They will have different staffs that will be conducting audit for this client, and they will not mix them with this client, even though that itself is debatable. That you have two clients that are opposing. Take for instance Cadbury and Nestle. Your auditor for Cadbury and your auditor for Nestle. They are rivals, they are competing firms. There is no how that information leakage or confidentiality cannot be breached in that instance. So, and at that, when that happens, you are no more independent. If you are auditor for Cadbury, for instance, the management of Cadbury and they get to know that you're also auditor for Nestle, they can be putting pressure on you to leak information. Even if they are not doing that, outsiders, the public can say, this thing, these people cannot be independent. I hope it's clear. So you can also check this material will be made available to you for to go through after this class. So you can still read some of these points that are listed here. The case of objectivity, we said that auditors should be objective in their work, they should be fair, they should be honest. We have that integrity. I've talked so much about integrity. So one other area I want us to look on this behavior of auditor is conflict of interest. Conflict of interest. And this is something that can also threaten the independence of an auditor. Now, there are situations that can pose conflict of interest for the auditors. One of such situations is conflict of interest between members and conflict of interest between clients, competing clients. What this simply means is that an auditor can have two opposing clients. And once you have that, just like what I was explaining earlier, when you are client to two opposing or two competing clients. Now, and I've said that some firms do have that. So what are you supposed to do when you have that? How do you address that? So even for the issue of independence, threat, and all of that, how do you address all of this when you have conflict of interest, when your independence is threatened? And that's what will lead me to the different threats that we have that can threaten the work of an auditor or an accountant. Now, what this is saying is that because an auditor or an accountant is expected to behave in a certain way, the code guides how you should behave. But client auditors and accountants can find themselves in situation where they are threatened. You have a boss who is asking you to do otherwise. You have even sometimes it could be the management. They want you to report what is not. Or you have two opposing clients. Or you find yourself in situations that your work, your independence is threatened. How do you address that? Now, there are different categories of threats that the auditors or accountants can face. Just like we have five major fundamental principles, we have five major categories of threats. We have five major categories of threat. And this is a very common question also in past questions and exam. There are five major categories of threat. Now, number one is self-interest threat. Self-interest threat. I've discussed something like this before. Now, this is a threat that the auditors face because of financial interest or self-interest in a situation. I'll give you an instance. MTN is a listed company on the Nigeria Stock Exchange, right? And you have shares, you bought shares in MTN. So your firm is now they are auditing MTN, and you are the senior engagement partner for that audit. Now, the fact that you have shares in MTN means that you have financial interest in MTN, because if MTN is doing well, their share is increasing and you have money in your pocket. But you are also the auditor to MTN. Now, when you are conducting your report, there is self-interest try to protect your interest to make sure that MTN does that they are doing well. So there is tendency that because you have interest, you have shares in MTN, there is possibility that you might not be objective. There is possibility that your independence is threatened. There is possibility that you might not display professional competence. Oh, in a case that let's say you don't have interest, you might be asking when you are conducting the audit, you're asking for so many source document, support document, and all of that. So your ability to do a thorough job is threatened when you have self-interest threat. And what will be self-interest threat is usually financial interest. So once an accountant has financial interest in a client, or you have a joint financial interest with a client. Let's even take the case of a small audit firm. Maybe you have an audit firm, and your friend that you go to school together now said he wants to set up a company. You are like a shareholder in that company, and after a while, the friend say, come and do audit for this our company now. Is your company, you have shares, you are part owner of the company, and you're now coming to do audit for the company. That's self-interest threat. Now there are ways to address this threat. What other areas can you have self-interest threat? Maybe you've been auditing a client for a long time, and the client has been a very good client. They pay their fee, they always pay very well. And they now say they don't used to hold. Once you give them the audit fee, they pay. The client is now saying, maybe we need to change our auditor. Now, because you don't want to lose the client, you might want to do something to retain the client. That's self-interest threat. Another area is maybe you want to gain a client. So you want to do work that will please to the client. Then if a firm has collected, let's say an audit firm has collected a loan from a client and you're now the auditors. So you've given a loan to a client and you are not the auditors. So once there is financial interest involved, you usually have this kind of threat. Any questions so far? Ibrahim, do you have questions?
No, it's
Before I,
okay.
okay. Any other person, do you have question before I go on? Okay. If there is no question, we've talked about the category of threat. Number one is self-interest threat. The second threat that we can have that will threaten conflict of interest, that can threaten independence, that speaks to integrity, will be threatened.
Good evening, Mr. Mayowa.
Which threat usually occur when.
Good evening, Mr. Mayowa.
Good evening.
Yeah,
Good
Mr.
evening.
Adejuwon on the line. Yes, there's a break. Maybe it's a network from your side. For about 2 minutes now, we couldn't hear you. Maybe you can just recap from the self-review threats.
And also, I can't see the share screen.
Okay. Hello, Mr. Mayowa. I guess his network is fluctuating.
Maybe. But can you see his screen? Can you see the
I can't see,
screen?
so that's why
Okay.
it's not sharing. Let's
Okay.
hold on for him.
Okay. Hello, can you see my screen now? And can you hear me clearly?
Yes.
Let me know if you can hear me and you can see my screen now.
Yes, it's better. We can hear you.
You can
Yes,
hear
sir.
me now?
Yes.
Yes,
Oh,
we can hear you.
okay. Sorry on that. I think my network
Yeah.
just okay. Can you hear me now clearly? And can you see my screen? Let me know.
Yes, we can.
hear you.
Okay. So sorry for that break. I was talking about the threats that accountants and auditors can face in the course of their work that can pose a threat to their independence or pose a threat to their being objective. And we've discussed earlier the the self-interest threat, which usually means that there is a financial interest. Maybe you have a shares in a particular company, say for instance MTN, and you are called to audit that particular company. There is likelihood that you might not be very objective. Your independence might be threatened. Then I'm talking about the self-review threat now, which is the second threat that the category of threat that accountant can face in the course of their work. And like I said, self-review threat is usually you reviewing a previous work you've done. What this means is that you've prepared a report in the past, and you are now coming in as a reviewer. And I give the instance of, let's say, this particular exam. You go to the exam, you are now giving your script to mark. How objective can you be in that situation, knowing that you really need this to pass this exam? So if an auditor has a stake, you've prepared a work. I give an instance of a former head of finance who is now the audit partner. You are reviewing yourself. How objective can you be? So any situations that, for instance, you are a member, previously a director or an officer in a client's office, and you are now an employee to come and review what you've done in the past, this will pose self-review threat. It's usually happening. It might not even be as an auditor. It can be maybe you were formerly working in a company and you're now coming as a consultant to come and review the work you've done. Usually, self-review threats will come in. So anytime these situations happen, what are you supposed to do? This threat, you need to identify this threat to know how to apply the right safeguard to it. But you must know that this threat exists. That's what we're saying. So, for instance, we have some example here. The discovery of a significant error during a revaluation of the chartered accountant in public practice. Maybe you are working for the government before. You now go into private service. You're now coming to review what government has done. How objective can you be? Where is your independence? Can you rightly prepare a report that will be objective? And don't forget, when we are talking about the fundamental principle, we said something about integrity, honesty. Now, you might want to be honest, but when the situation itself is posing a threat, your honesty is in doubt. Then, when it's in the case of independence in appearance, how will a third party see that situation and say you are independent? Somebody discovered that you were the head of finance in this fund, you are coming in as an auditor. Even if you do a thorough job, because the public or a third party already have that information that you were here before now and we are presenting done. You're not saying it's not showing true and fair view. Well, you're not the one that prepared it. So those are the situations that can pose self-review threat. The third type of threat we can also have that accountants can face in the course of their work or auditor is what we call advocacy threat. Advocacy threat. Usually, advocacy threat happens when you are standing for or against a client. You are trying to defend or be against a client. You're supporting a client, or you are saying, this client can never do this. You are vouching for a client. This is an apparent threat to the auditor's objectivity. What we're saying is that anytime, whether you are an auditor for a client and you are taking side for the client in, especially in a court proceeding. So what we are saying is that accountants or auditors should not be in a position where they will go to court to defend a client. It's different from the confidentiality I explained, that the government is asking you to come to court to come and explain something. What you is different. You are not defending in that situation. But here, you are coming to say, this client, this client cannot do this. This client, I know him better. That's a threat to your independence. Because anytime you are taking side with client, it means that whatever your report or opinion you are expressing for that client is not going, people will not see it as being independent. Your objectivity is threatened. If you are saying a client can never be in this position, or you are against a client, people will be like, how can you be saying this for a client? You are preparing a report that you are saying you've exercised professional judgment. So this is a threat, and accountants should be aware of this. Another way advocacy threat can come up is, I said that recently there have been bank recapitalization. Banks are trying to boost up their capital base so that they can meet CBN requirements. Now, if you have you work accounting firm or an audit firm, and you are now soliciting for people to buy shares in that client for a bank, like Fidelity is selling shares now, and your audit firm is promoting that, oh, come on, buy shares, or you have a consulting firm as a chartered accountant, that will pose a threat to your work. It will pose a threat to your work. And don't forget, we're talking about professional ethics. All of this see how it's been addressed. And when you look at your past questions, most of the questions will come in case study format. They will post a scenario. Once you see the scenario, you should know what threat are they talking about here. Once you can identify the threat that is being discussed, you will know how to put up a safeguard for it. Any questions so far before I go on? If there is none, the fourth threat, I hope we are noting it. The first one is self-interest threat. The second is self-review threat. The third that I've explained is advocacy threat. The fourth is familiarity or trust threat. As the name is, familiarity or trust threat. What this simply is saying is that you build close relationship with the client to the point that it's like two of you are 5 and 6. So the relationship, and this usually happen when you've been the client has been with you for long. So it has gone to a stage that you will be sympathetic to the client's interest. You've been auditing the client for the past 10 years, you've known the business in and out. This situation will create this kind of threat. So the management can say, Oga, what are you saying? Then the case of the other partner that is married to the head of finance, that's a familiarity threat. Your wife works as the head of finance in that client's office, and you're coming in as a partner. You want to audit the financial statement that your wife has signed up. When you get home, all the wife needs to do is just that's familiarity threat. It can also happen when there is related party. When a case of related party, you have related interest in that entity. Maybe your family is involved in that client you are conducting audit for. That's familiarity. So once a member of the engagement team have a close or immediate family relationship with the client in any position to exert direct and significant influence. Now, you can have a close member in a client's business, but if that family member cannot exert influence over you, there is no familiarity threat. I hope you understand what I'm saying. You are the audit partner, you are auditing a particular client, but you have a family member in that client, in that office. If that member does not have significant influence over you, maybe it's just a junior staff, then we won't say there's familiarity threat. But once that member holds a position, is a key position that can influence you, then there is familiarity threat. Is that clear? If you have questions, you can stop me. So there could also be giving of gifts, special treatment. Oh, because you are auditing, let's say you are auditing Cadbury, for instance, and anytime you go for the audit assignment, they package all their products worth 500,000, or you are auditing a particular company that is into sales of a certain equipment, and they are always giving such gift and treatment. Or you are auditing an hotel, an hospitality hotel, and they say, "Don't worry, when you and your wife can come and spend weekend." That breeds familiarity threat. And don't forget, all these threats, what they are posing risk to is the independence of the auditor or the accountant in their work. And once independence is threatened, objectivity is threatened, your professional judgment is threatened, and the ethics of the whole institution is threatened. And don't forget, we said at the beginning that accountants should not put the profession into disrepute. The public should not see accountant and say, so you have to be mindful of all this threat. Now, the last threat, category of threat that accountant or auditor can face is what we call intimidation threat. Now, this can happen when a superior is threatening you to do otherwise, or they say, we're going to sack you or replace you. It can be a threat of court case, litigation. All this can pose intimidation for you to hurt otherwise, to compromise your professional skepticism and judgment. It could be pressure that if you don't submit the report, the financial report by so time, your bonus will not be paid. Or if you don't do this, you will lose your job. Or if it's an audit firm, like if you release that financial statement and you qualify it, we're going to fight you or we're going to do this. Once there is a threat to do otherwise, and it's coming from higher authority, maybe director, management, and they want to prevail on the accountant to hard otherwise, that's intimidation threat. Now, having looked at all these threats, self-interest threat, self-review threat, advocacy threat, intimidation, and familiarity threat, how do you mitigate this threat? What are you supposed to do to address this threat? And that will lead us to what is called safeguard and procedure for the threat. Before we go into that, is there any question from anyone? Hello? Okay, if there
No
is no
question.
question, okay. So if there is no question, what we have for safeguard, now there are three major areas of safeguard that the accounting profession have provided or that are in place for members to use. There is safeguard that is provided based on the fact that you are working as an accountant. Your profession has provided this safeguard. And the safeguard that the laws of the lands are provide, legislation. So there is safeguard created by profession, the legislation and regulation. Then there is safeguard that you as an individual needs to know that you need to put in place. Then there is safeguard that the work environment provide. So there are three major safeguards, like I said, that has been provided. One, the one that the profession has provided. Two, the one that individual you need to provide yourself. Then the third one, the one that workplace provides for you. So the environment has provided for you. So in your work, in your office, the one that your company has put in place to help when situations of this threat come up. So we'll look at the first one. What are those safeguards that your profession as an accountant has been provided to address this safeguard? You know, when we started, we said there is principle-based ethics and there is rule-based ethic. Now, one thing that the accounting body has done, whether you are in Nigeria as a chartered accountant or you are overseas or anywhere, there are guys that ICANN as a body has provided to address different area of threat. One of such means that they do that is there is training and educational requirement that you have to go through. All these courses, you taking this exam is a form of safeguard. You know, for instance, if you're working as an accountant and you're not planning to be chartered, you're not taking ICA course, you will not know that there are safeguard. For instance, you're working and something is happening, somebody is posing a threat. You might not even know that there is a familiarity threat. So this training to be an accountant is a form of safeguard provided by the profession. That's one. Now, for you to be chartered accountant, there are requirements that you must go through. By the time you finish and you get qualified, you have so much knowledge to know how to apply when any of these threats come up. That's the first one. So that one is education, training, and experience requirement by the profession. The second one is the continuous professional development requirement. When you get chartered, it's not over. You are just starting. So there are various professional development programs that the HICAM body conducts from time to time. That as you take opportunity of them, you get enlightenment on how to manage different threats that will come. So there are various programs ranging from what you're supposed to do, how you're supposed to address different situations. So that's there. Then two, or the third one, there are professional standards and monitoring and discipline process. Now, ICANN as a body, they have monitoring team that goes to monitor different accounting and audit firm to see how they are conducting their businesses, such that they want to also know what threat are they facing with client and how they should address it. So there is a monitoring team that ensures that they are also doing what they're supposed to do. There is even disciplinary committee that I kind of set up that if you don't apply, if you are facing threat and you don't seek appropriate or you breach any of these fundamental principles, they have disciplinary committee that you will face. So when you have that knowledge, if you have issues, you know that, oh, I shouldn't do this. Then they have reporting system. There is a review of firm. There is what we call quality control system that every audit firm should have. I can also have it, that review your processes, how you do communication with third parties, how you peer review. Now, all these processes help to address this threat. Take for instance the self-review threat. If you're in a situation that yes, you are reviewing the work you've done before, there's what we call peer review. Peer review allows you to send your work to your colleague to review, and that colleague will be the one to sign it off. So the fact that you are faced with self-review threat does not mean you keep quiet. You employ the opportunity of this peer review. You've prepared a financial statement for this company and you're coming in as an auditor. Rather than keeping quiet and let that threat just be dead, what you need to do is to take that report and give to a peer. And there are different types of peer review. There is the one that you call code review. There is one that you call alt review. One can just review and not sign off. There is one that they will sign off. Then you seek professional counsel. There is room for legal, you seek legal advice on some things. Take, for instance, intimidation threat. When you are faced with a situation that somebody is threatening that if you don't do this, they won't pay you or they will send people to go, you seek legal counsel. So these are some of the safeguard that the discipline, the profession provides. Now, when it comes to safeguard within the work environment, what has the workplace put in place to address this threat? Now, depending on the other firm you work for or the company you work for, there are in-house provision to address threats that you might face, whether as an auditor or an accountant. Take for instance, there are different clients and different audit firms that have how they appoint audit partner. So once there is a form that will be filled to show that there is no conflict of interest. So before they take on job, they do all of that. The policies and procedures. Different companies have policies and procedures, code of conduct, conflict of interest, code of conduct, whistleblowing. So these are various processes that companies have put in place to address threat that you will face. So most corporate environment has what we call corporate governance structure. So for instance, most listed companies have audit committee. When an auditor is facing threat from management, he has to go to audit committee. There is a process to go to shareholders to report all the threat they are facing. Any questions so far before I go on? Are we together? Okay. So if there is no question, I'll continue. Now, the last safeguard that is in place is safeguard that you need to imbibe as a professional. Now, there are certain safeguards that you need to put. You must be careful to do a thorough study. You must always, as an auditor, be sure that before you take up any engagement, you do what we call audit planning. You have you as one of the standard is at 200. You must know your client very well. There must be engagement letter clearly spelling out what you would do, what this audit is about. Those are some of the ways to mitigate this threat. Now, if there is no question, I want to go to the next topic, the next subtopic rather, ethical conflict resolution. Ethical conflict resolution. When we finish this, we'll look at past questions that speak to what we've discussed so far. I will just open some past questions for you to see how these questions are set. If you have questions, you can also drop in the comment section so that by the time I'm sure we can look at it together. Okay, so what do we mean when we say ethical conflict resolution? Now, there are situations that conflict will happen. It's bound that in the course of work there will be conflict. Take for instance some of these threats that I've discussed above. Maybe you have intimidation threat, or there is perceived in lack of independence. The top party is thinking, there is this auditor cannot be independent in this situation, or your objectivity is threatened, or there are different situations that bring conflict. How do you resolve it as a chartered accountant, as an accountant? How do you apply, how do you ensure that the fundamental principle that we've talked about is applied in addressing conflict resolution? So there are 5 major ways that is expected for you when you want to resolve conflict. Okay, take for instance, you have issue with your boss. Your boss is saying you should do something, you are not convinced. Or management is saying you should do something, you're not convinced. Or there is disagreement between the auditors and the management. How do you address that before reporting it? Now, one of the five ways that is expected as an accountant to resolve any conflict resolution, these are standard. Number one is relevant facts. You must get all your facts right. What are the facts in this case? What is the issue? What am I faced with? Oh, your boss is saying report this number or not? What is the core issue here? Now, after identifying what's the core issue, the second thing is what's the ethical issue involved? That ethical issue speaks to the threat you are facing. Is there familiarity threat in this instance? Why is this an issue? You've gotten the fact. Oh, somebody is saying the fact here is that this report is not well prepared. This report is doctored. This audit opinion, we are not taking it. This thing that my boss is saying I should do, I can't do it. Why? Oh, this is falsification of number, or this is incompleteness in report, or this is inaccurate, or this report is not applying the right accounting policies. What is the fact? After identifying the fact, the relevant fact, what is the ethical issue involved? Why is this a problem? That's what it's saying. Why is this a threat to you? Is there familiarity threat? Is there intimidation? Now, after identifying the threat, fundamental principle relating to the matter in issue. Now, this will now take you to the 5 fundamental principles. What is threat? What is this threat speaking to? If it's familiarity issues, is it speaking to integrity? Is it speaking to objectivity? Is my objectivity threatened? Of all the 5 fundamental principles, you will see the threat that applies to them. So when you've identified the fact, the issue, the ethical issue involved, that's usually the threat. What fundamental principle relate to it? Then the next thing you will do, establish internal procedures. Now, this will now speak to what are the safeguards that has been prepared. Is there a safeguard that the profession has prepared? Is there a safeguard that the company has prepared or the firm? Is there a safeguard I can apply by myself? Do I need to seek a legal counsel? Then the last thing you will do, alternative courses of action. After identifying the establishment process, this is what I should do. Is there still an alternative way I can address this issue that everything will still be resolved? Can there still be discussion with management over this? Can there still be a way we go about this? Now, the reason why I'm stating it like this is so that you can remember. So when you see a question that they put up the story and now say requirement, how will you address the conflict between audit firm A and the client B, giving following in line using the applicable procedure or process in resolution. Just know that these are the 5 things. I'll take it again. Relevant fact. What is the main issue at stake here? Are they asking for you to change figures? Are they forcing? What is the main issue at stake? Is it to prepare a report that is doctor or window dress a financial statement? Then the second thing, what's the ethical issue involved? Is this an intimidation threat? Ethical issue will usually speak to threat. Is it a familiarity threat? Then after you've identified the ethical issue involved, which is usually a threat, what is the fundamental principle that relates to this? Is this going to affect is it going to affect my objectivity? Is it going to affect me being applying integrity in this situation? Is it a case of professional competence? Are they saying that I'm not competent to do this? Have I exercised due competence and due care? Is it a case of professional behavior? Usually, professional behavior will speak to independence in appearance. A third party is not seeing you as not being independent. Then, are there any? What are the established internal procedure, which is usually safeguard? Is there a safeguard provided by the profession? Is there a safeguard provided by your workplace? Is there safeguard that you can apply yourself? Then, are there any alternative course of action that I can take? If there is none, you go ahead and follow the internal procedure. And if there is, you go ahead and do that. So this, just to go over what we've discussed so far, today's topic was on professional ethics and code of conduct. And we started with the fact that because we are accountants and we are a noble profession, you are expected to behave in a certain way. So because of that, different accounting bodies have different ethics that govern the behavior of accountants in their region. And we look at ICANN. ICANN has a principle-based ethics code. Some other location might have rule-based. And we say, what are principle-based ethics? Principle-based ethics will give guideline on how accountants should apply themselves to certain situations. There are general guidelines, general principles of ethical behavior. So accountants only need to apply those principles. And we say what are rules-based? These are specific rules that speak to how you should behave. Rule-based are more definitive. This is how you should do when you are faced with this. And we said that as much as principle based might be flexible and have its own weakness, rule based usually have more weakness. The reason being that there are different circumstances. They can be complex and various circumstances that the rule might not address. So you can't say because you have rule for how you behave, you can't list all the circumstances that accountants will face. So usually, more is better for most accounting body to employ the principle base. One other weakness of the rule base is that the rule base at times is not flexible and the business environment is changing from time to time. So you find out that the rule might be obsolete and you can't apply it to the situation accountant is facing because of the changing business environment. From there, we now look at the 5 fundamental principles. And I say this is a very, very critical part of this course and is a common question you see in your exam. Once you know this, you already have 5 marks in the list. Any question that you see on fundamental principle, you should be able to answer it quickly and write extensively about it. Number one fundamental principle that I have is integrity. As a member of the profession, the ICANN, you are expected to be straightforward, honest in all professional and business dealing. The second thing is objectivity. You should not allow bias. Bias simply means you should not be sentimental. You are preparing a report and you see something, you say, I should not report this thing. No. You report it as it is. Conflict of interest. Declare all conflict of interest. Undue influence. You should not allow people, whether superior or otherwise, to influence you to apply professional judgment. Professional competence and due care, you should develop appropriate skills and knowledge. So when you are taking up work from clients, you should have the required skill. You should be building up yourself. Then the fourth one is confidentiality. You should not disclose information that you come into contact in the course of your work. You have to hold it in esteem. Even though you will have that, there are situations that you might need to disclose information. And we said is when there is a legal duty to disclose or professional duty to disclose. The legal duty to disclose confidential information is when you are required by the court of law. Maybe the client has been found wanting and government is saying, come and say this. Is different from advocacy. You are not defending or against the client. You are only stating the information you have come into contact with. Then the professional duty to disclose is as an accountant, if you see any case of money laundering, fraud, you have to disclose it. Then we discuss the last one, which is professional behavior. You should comply with relevant law and regulations. You should not do anything that will discredit the profession. You should behave with courtesy. Then from there, we look at the key areas of the code of conduct of ICANN. The key area speaks to the area where accountants and auditors usually have issues. And we look at independence, confidentiality, conflict of interest. In independence, we said there are two major type of independence. Independence of mind, which is actual independence. When you say this person is independent, that's what the independence of mind. And what does that mean? It means that there is no undue influence or any form of extraction that makes you to change your opinion or not apply your professional judgment. So the state of mind that permits you to express your opinion without any influence, you are able to act with integrity and exercise your professional judgment. So once there is something that is affecting your objectivity and you can't express your opinion, you are not independent of mind. But once you can do that, that's independence of mind. Then we said there is independence in appearance. That means when any third party is looking at the work you've done or looking at your relationship with the client, that third party cannot say that you are not independent. That means there is no fact or circumstances that will make a third party to say you are not independent. And what situations can we have independence in appearance? It could be what we've discussed, familiarity. Once a third party will look at the relationship between the client and the auditor and say, this thing cannot be independent. And that leads us to the threat that auditor face. And in looking at the threat, we said there are still 5 categories of threat. Number 1 is self-interest threat. When there is self-interest threat, it usually speaks to financial interest. When an accountant or an auditor has financial interest in a client, there's usually self-interest threat. You want to protect the client because you have gain in the client. So how do you address those threats? We looked at that. Self-review threats, we look at when you are reviewing your work or you have cause to come and assess what you've done before. A member of the assurance team recently being a director of the client, a member of the assurance team having recently been employed by the client. Like I said, this material will be shared with the group once we finish. Will be shared on the WhatsApp group. Then we have advocacy threat. Advocacy threat is when you are taking side with the client, either for or against. So usually in a court of law, or you are advocating for the client. It could be promoting the shares of the client, acting as an advocate on behalf of the client. Then we also look at familiarity threat. This happens when there is a family member or you have a related party case in the client. So that is a form of threat. Then the last threat is intimidation threat. With all of these threats, we have safeguard to address them. And we said there are 3 major types of safeguard. The one created by the profession, the laws of the land, then the one created by the work environment, your company, and the one you apply yourself. And from there, we also look at ethical conflict resolution. How do you resolve conflict? Whether conflict between client, conflict in the office, conflict with management, or conflict with above supervisors. I would say there are five major ways of resolving conflict. One is identify what are the relevant facts in this situation. Okay, somebody has just dropped a question and said, please, sir, what are the safeguards provided by the work environment? Now, the safeguards that are provided by the work environment. Number one, you have policies and procedures for your company. Now, most companies have what we call policies and procedures that emphasize how you should address different situations, how what you are supposed to do in different situations, who you report to, if you have harassment or whatever, how you should take it up. Now, if it's for firm, there are firms that have what we call quality control. If you face any situation in the course of the audit, they have some process and procedures that are in place. Then the other one is most companies also have what we call whistleblowing. You can just anonymously report an issue you are facing and it will be addressed. For instance, the company I work for, we have a whistleblowing. Maybe a manager or whoever is intimidating a staff, you report it through that means and it will be addressed. Then some companies also have what we call disciplinary committee that once there are issues, they take it up and they look at it uh, in details to address. So these are the safeguards that the workplace puts in place to address threats that employees or accountant might face. Esther, I hope that answers your question. Are you still with us? Then for subsequent class, always send the material ahead so that we can. Okay. So the another person is saying that we should send this material ahead before the classes. Okay, we'll do that. So I'll send this. Then maybe a day to the next class. We'll also send the next topic. I don't know if I'll be the one taking the next class. Is there any other question before we look at past questions that speaks to this area? Any other questions? Are we together? Are we still there?
Yes, sir.
Ibrahim, did anybody have questions?
Yes, sir.
You have questions? Okay, let's hear it. Hello? Are you asking questions?
No.
Okay, it's fine. So I want to look at one or two past questions that speaks to fundamental principle and ethical dilemma. And so I'll share my screen. Once you can see it, let me know. Okay.
You can see us.
So you can see my screen. So let me share the past question. Okay. Let me know once you can see the past question now. Can you see the question?
Yes, sir.
Okay. So this question is May 2021 skills. Question 6. We are going to answer it together. Now, before you read this question, let me show you what the requirement is. The requirement is saying discuss the following: meaning of threats to independence. In relation to independence of auditor, discuss the field and pricing, financial interest, contingency interest, family and personal interest. Then the C part is saying the reason why the preparation of accounting record and management accounting constitute a threat to the independence of auditors. Have we seen the requirement?
Yes.
Okay, so let me quickly read the question, or Can somebody read for us? Should I call in someone to read for us? Who wants to read for us? Is anybody reading?
Wakato Nigeria Limited
Okay.
has experienced serious labor turnover, which has affected the business of the company in the last 12 months. The most frustrating issue was the resignation of a well-tested financial controller of the company close to year-end. Wakaso management is noted for timely financial reporting and rendering of tax returns due to the efficiency and effectiveness of the financial controller, who was also involved in the preparation of tax computations. The company has been finding it difficult to quickly recruit a new financial controller that will match the technical ability of the former accountant. The managing director of the company has invited the company's external auditors to a meeting, intimating them of the plan to employ their services to complete the write-up of the books of accounts and management account, pending when they employ a good chartered accountant to handle the financial operations of the company. The company's management, in order to ensure timely reporting, has also informed the auditors that to save time and meet cost of operations, the firm's staff will be accommodated in a 5-star hotel with mouth-watering offer of payment in lieu of feeding as recommended by the audit partner. In addition, the previous year's audit fee will be doubled and an additional 20% payment made if the management accounts and audit work could be completed within 3 weeks. The partner of the firm has rejected the offers on the grounds of possible threat to independence. The managing director complained to you as his brother, lamenting that accountants are not good businessmen and uncooperative. Required.
Okay.
Discuss the following. Meaning of threat
to independence. So, from the above and what we've discussed so far, what are the threats to independence that you can see there? What's the meaning of threats? Or in your own word, just anybody, just give me what are those threats? What do we mean when we say threats to independence? This is too much. What I was talking about independence earlier, and I mentioned two key things about independence. So can anybody just try? Just say one line, and I will know whether you've been with me or not. Meaning of threats to independence. Anybody trying? Okay, nobody wants to try. Anyway, when you talk about threat to independence, I said that there is passive independence and actual independence. And we talk about independence in mind and independence in appearance. What that is simply saying is that once there is no undue influence for the independence in mind, when there are situations that your opinion is being affected, you can't apply professional judgment. Your objectivity is not, you can't apply objectivity, then you are not independent. So what that this question is saying that you should explain what we mean when we say threats to independence. So what you are supposed to do here, if you can just write about all I've said about independence in mind and independence in appearance, you've done justice to this question. Are we together?
Right.
Hello? I'll give you guys assignment so that when we come next time, though apologies for not sending the material earlier. Maybe that's why I'm not getting feedback like I should. So the next question is saying in relation to independence of auditors, discuss fees and pricing. How can fees and pricing affect the independence of auditors? I talk about self-interest threat. Financial interest is also something that can threaten independence of auditor. If you read the case study, most time the way audit questions are structured, don't forget all these lengthy story. If you know the principle, you know the course, you know the topic. What we've discussed today is ethics, professional ethics, and code of conduct. All we've discussed principle based, we've discussed fundamental principle, we've discussed threats, we've discussed independence, objectivity, etc. Once you know that topic, anytime you see this story, let that topic refresh in your mind. Even if you can't apply it directly to this story, write what you know on independence. I want to teach you how to answer audit question. Don't be so bugged about the story at the expense of what you already know. Even if you don't know, I'm giving it to you. If you don't know this story, once you answer the question based on what you know as per the topic, they will get your mark. And that's why if you take your pathfinders and you go and look at the solution, you find out that most of the answers they don't even speak to the story. Because that's why when I started, I said there are some expectations that the examiner is expecting from you as regards audit. It's not for you to just be trying to look in the story whether the answer is there. The answer are usually there, but you might not see it plainly. Why I brought this question for you is to just show you how the questions will be set. You will see stories quite all right. But when you see the requirement, at the back of your mind, you must know where it applies in what you study, what you prepared. For instance, meaning of threat to independence. What could threat your independence? Once there is a third party that is looking at why would this auditor say it's independent? That's independence in appearance. Or when there is intimidation directly, somebody is exacting influence on you. That's why they put 2 marks for this. Once you mention those 2 things, you are fine. In relation to independence of auditors, discuss fees and pricing. How can fees and pricing affect the independence of the auditors? We have self interest threat here. Once there's self-interest, the firm is saying we are not going to pay, or the auditor is charging too much, reduce your price, or the auditor wants to do what we call low balling. Low balling simply means charging a low price so that you can win the client. The independence of the auditor is threatened. So once you mention the threats that can happen here that will threaten the independence of the auditor, financial interest is still self-interest threat. Once an auditor has financial interest in a client, you have shares in a client, you have investment in a client, you are part owner of the client, and you're auditing them. Can you be independent in that situation? Contingency fee. Maybe you have loan, you are expecting money, you are saying they should pay certain money before you render your services. Extra charges. It's not how you be independent. Family and personal relationship. This is like familiarity threat. The client you are auditing, you have a family member who has significant influence that can influence you there. Your independence is threatened. So audit is not much of cramming as understanding the principles. Then the last one is saying the reason why the preparation of accounting records and management account constitute a threat to the independence of the auditor. Why would preparation of accounting record and management be a threat to independence of auditor? The reason is simply when auditors now, one thing I must say is that this course, we are looking at it in the light of external auditors. We are not looking at it as internal auditor, though we'll discuss some internal auditors issue in the course of the course. But anytime we are mentioning audit or auditor here, just think of external auditor. So this question is saying why the preparation of accounting record and management account constitute a threat to the independence of the external auditor. How would the preparation of so if auditors have undue influence by management, maybe when they are preparing their or the auditor is involved in executive capacity in the preparation of this accountant, That's why auditors should not have executive capacity in the client they are auditing. They should I didn't if when I said the pack to you, you will see that maybe I need to share the screen and the pack again. Let me share the pack for where that is addressed. So where is the pack now? Okay. So let me know if you can see the pack. Can you see the pack? Can you see my screen?
We are seeing the material.
Yeah. So look at the rules on independence. There is a part here that says it should not accept fee amount of which is dependent on the success of the assignment. This speaks to the fees and pricing. Then this place says it should not act as an auditor where it currently acts for the client in executive capacity. So if a client is acting in executive capacity, an auditor is acting in executive capacity for the client, the preparation of the management account and financial record will never be seen to be independent. So it will pose a threat to the auditors. That's what that part is simply saying. So when you understand the course, when you see the question, even if you can't relate with the case study, you will answer the question. I hope I'm clear on that. So next week, if I'm the one to take you on Thursday or Friday morning, I'll send the pack so that the class can be more engaging. Is that clear? I'm trying to look for other past
Yes.
questions that we can also share. But if you still have any question, let me know before we go. We'll be rounding up soon. I'm trying to see other past questions that we can also look at. Okay, maybe not for her, but I will advise that you also get Pathfinder. It's good that this time, once we finish a topic, you look at past questions that speaks to that topic. Can get up to like 5 year. Pathfinders usually come 5 year or 6 years. So please, let's do that. Before we go, any other questions before we call it a day? So if there is none, we'll come to the end of today's class. I hope you enjoyed the class. Apologies for not sending the material on time. I will advise that we also join early. When we started, we have few of you on, but it's good that we join early so that we understand. And if you have questions, you can still send to the WhatsApp group so that we can stay address it in the course of the week and ongoing. So at this point, I wish us a good night rest. If there is no question, we've come to the end of the class. Is that fine?
Thank you, sir.
Okay. So
Thank you,
see
sir.
you
Good night.
next week. Good night.